Today on Reuters Breaking Views, why big deals taste good for Nestle and how it's not just regulation driving BBVA's Chinese burn. To talk about these stories, Pierre Briançon. Let's kick it off with Nestle. Some disappointing, I say disappointing numbers, but emerging markets in Europe still look weak for the group. And then, of course, there's this whole Ferrero deal, which they've denied.
Well, Nestle's revenue are disappointing compared to analysts' expectations, which may have been a bit. If you compare it to other companies in the same space, we're talking Unilever, Danone yesterday, who sent a warning about that it wouldn't meet its target. Nestle is doing pretty good. Organic growth at around 4%. Whatever. It's not bad. That's sort of what we're saying. But if the organic growth slows, then there's a case for Nestle growth to come from acquisitions. We're not talking about Ferrero, which has been denied by almost everybody.
And Bulco's denied it as well.
Very, very firmly. And this is a private company, which, by the way, would be a very, small piece of chocolate to swallow for Nestle as a 10 billion euro company. They can afford that probably without even noticing, out of their own pocket. But there may be a case for larger, more significant acquisitions. Remember, there's always the talk that they might sell their L'Oréal stake.
That's right, yeah.
A stake which is purely financial for them, absolutely not strategic, which could feed and cover cash that they may not even need for a big-time acquisition.
The point that Robert Cole makes in his piece is Nestle can afford to buy its way out of a saggy sales profile.
Absolutely. Or acquisition might be a good.
They're expecting 5 to 6% next year anyway. They're expecting a pickup next year anyway. What sort of sales targets should a company like Nestle be looking at?
Well, if you're talking serious growth, you're looking at 8%, type of growth that really makes the company what it is, which is one of the world's leaders, a 200 billion by market cap company, and a big player that is looking around and saying, okay, where can we go now?
All right, BBVA. They've made this withdrawal from CITIC. The Chinese bank, and I guess what we have to weigh up is this a 2.3 billion euro write-down with 2.4 billion of core Tier 1 capital that they get as a result of this, as a result of preparing for Basel III.
Yeah,
is it worth it?
Well, it's okay. We're saying Basel III is basically an excuse for them to get out of what was a bad investment. CITIC was not the best bank to go into China to begin with. It's the 10th largest bank in China. The investment was pretty bad. It was worth about around estimated valued at around 3 billion euros not too long ago, and so 2.3 billion write down is kind of a significant piece of that. It's a partial disposal because they have to stay in CITIC, so it doesn't appear as if they're voting against China in a way, and so they have to be very careful to. It's not a vote of non-confidence in China. So there are political considerations involved. The bottom line is, one, it's a bad investment once they get out in not very good conditions. 3, the Basel III, as real as it is also mostly an excuse because they should have gotten out of it anyway. And they get under the 10%, they have to market to market, and so now all the kind of complicated capital rules apply, so that they didn't have anything to do there. It's good that they go back home. Spanish banks have other fish to fry, and others should follow suit.
Okay. Pierre, many thanks for that. Pierre Briançon. If you want to watch our US show, that comes on every day at 12:30 Eastern, 17:30 BST. I'm Axel Threlfall. This is Reuters.